Okay, welcome back. So today I'm going to do a recap of the first week of trading. Um, for anyone who hasn't seen my previous videos, I am doing the 20 trade test from Mark Douglas's book, Trading in the Zone. Trading in the Zone, as far as I'm concerned, is a must read. It deals with the psychology of trading, psychology of day trading, psychology of swing trading. It's incredibly important, far more important, in my opinion, than learning how to read charts and finding demand supply zones. So, so May 5th was the first day of trading. I took a trade. Now, I like to wait for the first 30 minutes of the market open before I do anything, just to let some things work out. And what Mark Douglas says to do after you read his book, in order to get a hold of your emotions and control your emotions, he wants you to pick a strategy, pick an edge, and work that strategy like a machine, like a computer. When your setup appears, you take it. No thoughts, no emotions, no nothing. You take it, you manage the trade based on your risk management parameters, right? And you get out at your stop loss for a loss if you have to, or you ride this to its conclusion based on a predetermined set of rules for that strategy that you're going to apply to trading for 20 trades. So the strategy that I decided to use was working off the 9 EMA. This blue line is the 9 EMA. Now, I use TOS, Thinkorswim, for my charting. If you don't have Thinkorswim, just go to Schwab, open up an account. I don't even think you have to fund it. And you just download Thinkorswim and you could do all your charting on there if you want to follow along with me. And what I'm doing is the 9 EMA. And the strategy I'm employing is if there's two green candles close above the 9 EMA, I go long. And I'm supposed to ride that trade until two red candles close below the 9 EMA. On the short side, if two red candles close below the 9 EMA, I go short, meaning I'm buying puts, and I ride that trade either to my stop loss or till there's two green candles close above the 9 EMA. That's the strategy that I decided to employ. So, May 5th, 2025, I started this strategy. My first trade was at 10:12. So you could see here I had these two green candles close above the 9 EMA. So once I saw that close, I executed. I bought 5 SPY calls. Oh, by the way, I'm on a 2-minute chart. I'm using the 2-minute chart for this, and I'm trading the SPY ETF. So I had, so I had after 30 minutes of the opening, two green candles closed above the 9 EMA, and I went long at 10:12, which was right here. And then I sold at 10:34 because I had two red candles close below. So I didn't get what I wanted out of this trade. So I took my stop loss and I ended up taking a small loss there, $120. And that was my only trade for that day. Okay. Now looking at this chart, I could have gone here. Here I had two green candles closed, so I would have bought here. But I think unfortunately I had to shut down. I had to go somewhere. So I only got one trade in that day. But this trade would have worked out nicely. So, for instance, if you're going to look at this strategy and back test it, so um, this trade worked out, but I didn't stay in it. I was up maybe 100 here, and then it traded back down, and I took a loss. But the strategy then worked here. You had two green candles, and you could have rode this up to here. There's two red candles close. Could have rode that down to here. Then you had two green candles in a row close here. If you went long here, you could have rode that up, and on and on and on. Even towards the end of the day, you had a nice trade here, two red candles. If you went short and bought some puts here, you could have rode this, and then you had two green candles closing above the 9 EMA here. So the strategy I employ for this test, I would have gotten out here, but still, it was a nice run here. So that's for Monday. Tuesday, now this is grade area is the overnight, which we're not dealing with. So Tuesday, Tuesday, I was kind of reluctant to take trades here because we had Powell speaking Wednesday. So the market kind of wasn't doing anything. So I took one trade here at 10:12, which was right here. So I let the first 30 minutes of the market play out. Here's my 9 EMA. I had two candles close above it, and I went long here at 10:12. I was up over $300, and I sold at 10:21, which is right here, for a nice profit of a little over about $340. and then that was it for the day. The market was just sitting here doing nothing, and I'm like, you know what? We got FOMC tomorrow. I'm not going to do anything. So I shut down. Wednesday, which is here, which is FOMC day. As a rule, I don't trade on FOMC day. There's over 240 trading days in the year. If I could take off 12 of those days because of the Fed yapping, why not? Why get mixed up in all of this? You know, on the FOMC day, I'm just not willing to do it. So I took Wednesday off. Okay, but I mean, if you wanted to back test it on FOMC day, you had two red candles close below the 9 EMA. You could have made out nice here. Two green candles closed above. Here, you would have got nothing. Here, you really wouldn't have gotten much. You had two red candles close here. That would not have worked. So you have to remember, you have to obey your stop losses. And I don't use a hard stop loss, but it might be a good idea to do that. And for me, I'm just looking to make a quick 300, 250, 300, $350 and get out, shut down my computer for the day and walk away. You know, if I can make $350 in 20 minutes, a half an hour, why go back in and risk that? I made a nice profit in a short amount of time. I can go do something else with the rest of my day. So here, we're still on Wednesday FOMC day. This would have worked out. You had two green candles close above. And I know this sounds like such a simplistic way of trading, but as you could see, I mean, it works. Here you had two red candles close below. Maybe you would have gotten out here, these two green candles closing above. But then you could have got in again here and rode this all the way down. But like I said, I don't like to trade on FOMC day. It's too crazy, too volatile. And I'm going to show you all the times of my trades that I took. I'll show you them. And like I said, I've only allocated $40,000 to this trading endeavor. I'm really a long-term investor. I've been a long-term investor for 35 years. I'm not going to put a large amount of my net worth into a day trading account or swing trading account, and I only put a small amount of that account towards any one trade. Okay, I'm not looking to hit home runs. All right, and this is the kind of, then I would call it a business. You have to treat this like a business. This is a completely scalable business. As you get better at this and your account grows, then you could start putting more money into a trade, right? Or as you're saving your money in your long-term investment plan, which if you watched any of my earlier videos, I show you why you should do that and how you can do that. I do it step by step. I have a 7 video series on how to get a long-term investment plan going. And um, so you want to have that in place before you attempt this. But this is a completely scalable business. As you earn money over the years, you could put more money into this account, making sure it stays in line with a very small amount of your net worth. Right? You don't put 50% of your net worth into a day trading account and start, hammering away at trades. You put a small amount, a very small amount, and you learn, because in the beginning you want to take very small trades because you're not going to be setting the world on fire right at the beginning. You're going to make a lot of mistakes, especially mental mistakes. And if you watch any other successful day trader who's been doing it 10, 12, 15 years, they still make these mistakes. They still make these mistakes. You're always going to make these mistakes. You're not going to win every trade, and you're going to do stupid things. There's 2 young guys that I follow that they're always making videos about the stupid mistakes that they make, right? So you have to start off small at this. You don't try and make $50,000 on one trade when you're just starting out. Shoot for 100 or $200. That's all. Just so you get screen time and you learn how this all works. Okay? So here was Wednesday, FOMC day. I didn't trade. Let's move on to Thursday. Now, Thursday and Friday is where I really, really screwed up. Thursday, I took 3 trades on Thursday. The first one is at 10:08, and I'm gonna put on the screen my trades from my broker, which shows the times, and you can if you think I'm bullshitting you, you could check the times versus what's on my broker statement versus what I'm telling you here. So I wait for the first 30 minutes. My first trade is at 10:08, which is right here. So we had 2 candles close below, and I bought puts. And I got out at 10:20, which was here. I think I took an $80 loss there. Yeah, that was an $81 loss. I was doing well, but then the market came back on me and screwed me up. So that was my first trade. Then I went in again, 10:22, right here. I had 2 green candles close above, right here. I went um, I went long again. I'm sorry, I bought puts there at 1022. Where is 1022? Oh, no, sorry, I bought calls there at 1022, which was here. So I had the two green candles close above the 9 EMA. I went long, and on that trade, that was the second trade of the day. I ended up losing $121 on that trade. And then my third trade for the day was 1041, which was right here. I had two red candles closed below the 9 EMA. I wrote this down and I made $123. So on Thursday, I ended up losing $80 for the day. Monday, by the way, Monday I lost $121. Tuesday I made $342. Thursday I lost $80. And the big mistake I made is I had three trades in. I lost $80 for the day. Which was around right here, and then I shut down my computer because usually I like to be done by 12 o'clock. And look what I missed on Thursday. Yeah, these two green candles close above. And let me tell you, on 5 contracts, I would have bought um 5 calls here. That's what I was supposed to do. Two green candles above the 9 EMA. I'm supposed to buy calls. And man, I missed all of this. This was probably $1,000 run from 1108 to, let's say, so you had two red candles closed, so I would have rode this to 11:58, 50 minutes. This was easily $1,000 on 5 calls, and I just shut down my computer just before this happened. So I want to tell you, this is what trading will do to you. I'm hoping that if you're new to this and you're wondering, should I be a day trader? This is the kind of thing you have to deal with. It'll drive you nuts. Um, so you could sit here and you could back test this strategy, this 9 EMA strategy, all day long. You got two candles here. You could ride that up for a little bit. You got, you know, here are two red candles closed below. This was a loser. This was a loser trade, right? But as long as you stick to your stop losses and you keep your losses small, when you get runs like this, man, forget it. It'll take care of your losses. So there's plenty of opportunity to take trades here. There's a lot of trades here. There's two red candles in a row. You would have ridden this all the way down here until these two candles close above. Then you had two green candles close above. This didn't do anything. Another two candles close above. Didn't do anything. Two red candles close below right here. That was a nice trade. Then you had two green candles close above. This was kind of nothing. Then at the end of the day, you had two red candles close below, and that was a great trade too. So that was Thursday. Enough where I just want to kick myself for shutting down too soon. Let's go to Friday. Friday was another mess. So Friday, I waited for the first 30 minutes, right? And then I had let's see, two green candles. So Friday, my first trade was at 9:58, which was here. So I had these two green candles close above after the first 30 minutes of the market open. And I went long here. And I ended up losing. I was up, and then I ended up losing $116. Now, where I screwed up on Friday was because the market in recent days has been in an uptrend, I've been reluctant to go short. And so you can't go into this with a bias. And this, I've read Mark Douglas's book, Trading in the Zone. I committed to doing this. 2 green candles above the 9 EMA, I go long. 2 red candles below the 9 EMA, I go short. And because I went into a bias, because I thought the market was in an uptrend, I didn't. Yeah, 2 red candles here. I didn't go short because I went into it bias and I missed out on this. This was on 5 puts, was a $700 gain that I missed out on. So if you're wondering, does this strategy work? Yeah, but you have to actually do it, right? So the 2 mistakes I made this week was shutting down too early and not following my strategy because I had a bias. And that was my mess. I missed that trade. My first trade, like I said, was 958. I lost $116. My next trade was at 1052. 1052 is right here. So we had two green candles close above. I went long. We had only 1 candle close red below. So I stayed in this trade. I wrote it up. I closed out at 1109, which was in here. And I made $153 on that trade. And my last trade for the day was at 1124, which was here. I had 2 red candles close below the 9 EMA. I closed it out at 1131, which was around here. So I had bought puts here. I closed it out for a $46 profit. I was mad at myself for missing this. So I just wanted to. I was up for the day. I wanted to shut down and take my profit. I ended up making 82.90 on Friday, and for the week, I took 8 trades out of the 20 trade test. I made $223.38. Okay, so here's the trades that I mentioned with from 5-5, 5-6, 5-7. I didn't trade 5-8 and 5-9. Here's the dates of execution. Here's the times of execution, and here's what I did: calls and puts, buying calls and buying puts. Okay, and those are my trades. So the first 8 trades of Mark Douglas's Trading in the Zone 20 trade test, I took. I'm up $223.38. All right, so we'll see what happens next week. All right, I hope yesterday, if you got paid, you put 15% of your money in a long-term investment plan. If you want to learn how to do that, go back and watch my earlier videos. I have a 7-video series on investing long term. All right. Subscribe to the channel. Please give it a like. Share it with people who you think might benefit from it. Leave any comments or questions, and I'll be checking daily to answer them. Got any questions about any of this stuff? Leave them in there. All right. This is Uncle Pete. See you in the next video.